Intel, the once king of the semiconductor market, has dropped down to a company many investors avoid due to numerous negative sentiments. But what if I told you one of its most important products has made an appearance, and stock market investors might want to take a closer look? Now, I've taken a closer look and it seems you have yet to hit the thumbs up, subscribe button, and have not checked out my free Substack, which you will find the link below. All jokes aside, in today's episode, we will do the following. First, understand Intel's problem, take a closer look at their most important product, and my final thoughts. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So as we see, Intel year to date is down roughly 50% during one of the best times in the semiconductor space, especially for those that are dealing with what I call advanced chips, right? Most companies like AMD, like Nvidia, Qualcomm, and all these other players are up a nice amount on a year to date basis. But Intel has continued to kind of burn in this market and now sitting at a market cap of roughly $100 billion. Now, for those that are wondering why is Intel stock down during such a great time in the market, there's various reasons, but I want to say there are two main reasons that are really dragging the stock down. First is the company is recently pushing more into its manufacturing endeavors. And while it's pushing more into this manufacturing endeavors, it's burning a lot of money, right? It's buying tons of equipment. And if you want to focus on advanced chips, you need to pay companies like ASML a hefty amount of millions and hundreds of millions for their lithography machine and all the other semiconductor equipment companies you have to buy to continue to grow and build chip fab plants. So that's the first reason they're burning a lot of money, right? Just the building of manufacturing plants and all the equipment that comes with it. And within this manufacturing endeavors, not only do you need to invest in equipment, but you also need to do research and development to be able to manufacture the most advanced chips. And Intel has done that by focusing on 5 nodes in 4 years. And it seems like they're moving on track with that. But obviously investing and learning and doing this research and development cost a lot of money. So within its manufacturing endeavors, those are the two main reasons for burning a lot of cash. Now, the second reason I want to say this company is down is due to it losing market share in its core products from competitors and big tech. And for those that are not familiar, its main products are CPUs. It creates CPUs for both the consumer market that go into your laptop, into your desktop, into some of your tablets, and it also creates CPUs that go into your servers, into the servers that AWS, that Microsoft, that Google run. Now, unfortunately, on both those ends in the CPU market, they're seeing a lot of competition, right? Their main competitor, AMD, is grabbing a nice amount of market share in both the consumer space, in the server space, and in the consumer space, you have a lot of competition now from companies like Qualcomm, from companies like Apple, and the list goes on and on. Unfortunately, on the server side, you also have all these big tech players developing their own chips. I mean, we have Google developing the Axion, we have Microsoft developing the Cobalt, we have Amazon developing the Graviton as well. So in the CPU market, you're also seeing a lot of competition. So these two reasons have caused the company's financials to be very weak and revenue to not grow at levels that investors would have hoped for. And we continue to see that free cash flow continue to burn. More importantly, it also forced the company to take various kind of incentives or way to save money. For example, we recently saw various layoffs, and if it's not layoffs, is the company providing incentives for employees to do things like early retirement. We also see other cost improvement incentives like delaying certain chip manufacturing plants overseas. We saw recently that Europe, some of their plants that were supposed to be built are now being halted by a few years to kind of help save money. So obviously, very scary time for Intel right now. Now, let's talk about the solution. And it's very funny enough to say that both of these problems can actually be solved by one solution, and that is called Intel's 18A. For those that were listening earlier, Intel 18A is the last node in that 5-node and 4-year plan that I mentioned, right? So in this 5-node, it was the last 3 were Intel A was the last one. Before that was Intel 20A, and before that is Intel 3. And that's where we're at right now, Intel 3. So Intel 3 is and Intel just released their new server CPU, which was Intel Xeon 6 with P-core processors, and that is based on Intel 3 node. So we can see that at least Intel is developing in their manufacturing push, and we can see it perfectly with their overall chip product. Now, there are also reports that within that 5 node and 4 years, Intel's not really going to make too much noise about Intel 20A and is really going to focus only on Intel 18A, as this is the real aha moment for Intel. Intel 18A is supposed to be the node where it has a competitive manufacturing push against the big player TSMC. And if this is true, this could be very, very bullish for the company's future for sure. Now, Intel recently announced that the Clearwater Forest chip, which is the first server CPU that is going to be based on Intel 18A, has kind of shown in real life. We kind of saw it at a recent event, and that this product will be out sometime next year. Now, this is the chip that I believe, and many believe, as we can see various reports here, that this is very important for the business. And let me explain why. If this chip turns out to be really good, it can do two things at once for Intel. First, it can showcase that as a chip designer, Intel still has it and can push competition back, right? Because Intel is doing two things. It's doing the chip design and it's doing the chip manufacturing. If this Clearwater Forest chip does really well, it's going to say, hey, look, while we're focusing on two things we can do, and this chip does well, it means we're doing really good compared to AMD, and it means we can do really good compared to TSMC as well. So this would be great news for both its core products and, more importantly, its manufacturing strength. The other thing is it does kind of help bring confidence to future customers of Intel and Intel's manufacturing business, right? Intel already has 2 design wins for Intel's 18A from 2 big companies that have a lot of computational needs. On September, we did see that Amazon AWS announced the partnership that they will be using Intel 18A to develop some form of AI fabric chip. And earlier this year, we did see that Microsoft is doing the same and is going to be building an AI chip, I believe, on Intel's 18A. So now when Intel's product, their Clearwater Forest chip, which is based on this Intel 18A, does really good, and if it does really good, then this could be seen as a bullish case that the products that they're going to manufacture for Amazon and for Microsoft are going to be really, really good. So it's going to create that confidence that future customers can come and say, hey, look, you are doing really good and we're going to get some of our chips manufactured on your end. It also can help Microsoft and Amazon become a returning customer and increase their overall customer chip needs as well, right? Because the great thing is these tech giants are all working on various chip designs. So they can obviously risk at the moment one chip not being built by TSMC. And it can help them diversify with cost and diversify with just the overall geolocation. But if Intel does really good, then some of these big players can say, hey, look, maybe we can shift some of our other chips with you as well. Another thing that could happen here, and this could be a very bullish sign for Intel, is right now the United States is focusing a lot on building chips inland. And we have seen a lot of incentives for companies to build chip manufacturing plants here with the CHIPS Act. But who knows, maybe in the near future, we might see a kind of incentive created by the United States where customers or purchasers of chips here in the United States could get some form of tax incentive or some form of monetary incentives, right? So maybe the United States government in the next few years could say, hey, look, if you want to save a little bit more on tax, if you want maybe some monetarily incentive, purchase some of the chips that are being made here in the United States, and we can provide you with those incentives. And I think that is a very, very possible case, as the United States really, really wants to build and bring manufacturing back here inland. And not only do you need to bring the manufacturing back inland, but you also need to provide incentives for those customers to make sure those businesses are nice and happy. Now, I do believe that Intel does have a secret weapon versus TSMC. And that is that it's also a chip designer and one that sells a lot in a lot of chips, right? Intel is one of the biggest CPU market shareholder, even though it's losing market share, is still the leader in this space. And in forms of market share, and for that reason, most manufacturing companies, they need to grab customers. But Intel is already one of the biggest, so that industry in the manufacturing push doesn't start from scratch. The second thing is Intel can pretty much use its chips to be a great promotion to its manufacturing business. Intel can say, hey, look, we design our best chip on Intel 18A and it's doing great on our laptops, it's doing great on our servers, it's doing great on our desktops because it was based on our manufacturing node, Intel 18A. And if you want to have a great chip like us, you should definitely come join our foundry business. So we can definitely see why Intel, being both a chip designer and a chip manufacturer, can be a bullish case. Obviously, there's cons to it as well, as you're focusing into different businesses, and that can also be a bad thing, but it does have its pros as well. Now, my final thoughts on Intel. First, I do believe Intel's Clearwater and their 18A server CPU is going to be a very, very important product for Intel, not only for their core product, but also for their manufacturing push. As I just mentioned, it would kind of showcase the results of their manufacturing business. So if that does do well, I think Intel can really be a turnaround story. Unfortunately, right now, Intel has a lot to prove. And while there are a lot of ways it can succeed, a lot of those were if, could it, will it, should it. It's not a guaranteed. So there's always that risk of investing with Intel. But like I mentioned, there's definitely the possibility and the probability of some success. And as an investor, I think what you're just really curious about is that Intel 18A. We can see forward 1 year PE ratio is roughly 20.65. And again, this is based on analyst expectations, and analysts could be completely wrong. Maybe most of these analysts could be very bearish on how successful Intel can be. But if they are very successful, this is going to be a very great turnaround story. So I'm not saying it's a great time to buy Intel, but I'm also saying it's not impossible for them to turn things around. And Intel 18A is going to be one of those key moments that investors need to watch. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.